Welcome to Slaughter Cheap. I'm your host, Matt Daly of MRD Consulting, and you are listening to the Tax Pack series in the Slaughter Cheap podcast. The Tax Pack series showcases tax issues, tax planning, tax pitfalls, tax traps, and of course, tax wolves, circling small business owners, posing an ever-present threat to their coffers and bank accounts of small businesses. Today, we have invited on a very experienced and high-level tax practitioner in the form of Mary Jennifer Huffman, aka MJ, of Tompkins and Peters CPA firm. Tompkins and Peters firm has offices in Helena, Montana, Missoula, Montana, Hamilton, Montana, and Las Vegas, Nevada. MJ is a licensed CPA in Montana and Nevada, and also a certified fraud examiner. She has been with Tompkins and Peters since 2007 and is currently a stockholder. Tompkins and Peters has been performing tax preparation and planning for my numerous casino development companies, my airline investments, my various consulting companies, and my personal estate for the last 25 years. I can attest to their thoroughness, technical tax knowledge, and fantastic customer service during that time. I would recommend MJ and Tompkins and Peters to any one of my clients or any small business that needs expert tax advice and preparation. With that being said, I'd like to introduce to our listening audience of faithful small business sheep, Ms. Mary Jennifer MJ Huffman. MJ, welcome to Slaughter Cheap.
Thank you so much for having me. I'm really excited to be here and talk about some tax topics today.
We are very excited to have you, and our audience is very excited to soak up your tax knowledge, and hopefully we can help them navigate the various wolves out there. But before we dig into some of those topics, and before you disseminate your tax wisdom upon all of us, our audience would like to know more about who MJ is. We want a little background on this tax practitioner assassin that you are. So please talk about where you grew up and maybe some insights into your childhood and ultimately what led you to become a tax practitioner.
Sure. I am actually a fifth generation Mary in my family. And so the MJ came from my mom not really wanting to be big Mary to my little Mary. So I went by Mary Jennifer as a kid, and I actually have the same birthday as Michael Jordan. In middle school, a classmate had one of those celebrity birthday books, and he said, "Wow, MJ, Michael Jordan, same birthday." And so it stuck from there. I think my mom always figured I'd either drop the Mary or the Jennifer and just go by either my first or middle name. And I don't think she was expecting the MJ.
That's a phenomenal story. There's absolutely no shame in the fact that Michael Jordan, MJ, has copied your initials and all that. And so I'm guessing that he's okay with it. You guys have probably had a few conversations on it, but I love it. Honestly, it's a very informal namesake, if you will, and it humanizes you. I love it. So I'm sure your clients do too. And hopefully your mom's okay with it, right?
Oh, yeah. My mom calls me MJ now too.
Good. Wonderful.
So I am actually the oldest of four girls. We were all real close in age growing up. And my senior year of high school, we were freshmen, sophomore, junior, seniors in high school. Okay. So all grew up together, was raised by a single mom. So we were a 5-girl household for quite a bit of my childhood. Sure. And yeah, I grew up in Southern California until I was in high school. And then I went to high school and college in Missoula, Montana. And so I still think of myself as a Montanan at heart. Most of my life, I guess, I was living in Montana, but Southern California to Montana was definitely a little bit of a culture shock when it happened right after my freshman year of high school. And it's beautiful, love it there, but I have lived, I think, in all four of our office location cities at one point or another. Las Vegas, Missoula, Hamilton, and Helena have all been home at one point or another, and it's been nice getting to see the full Montana experience, but also have some of the background from Southern California and Las Vegas, where my uncle lived while I was growing up. And so we'd do family reunions and that kind of thing back and forth for Las Vegas, and just ended up being a really good fit. That happened to be one of the cities that Tompkins and Peters has an office in too.
Excellent connections from that front. And you're right, Southern California to Montana, it could be a big culture shock, not just the physical environment. So my mom spent the last 25 years of her life in Montana, outside of Livingston, right outside of Yellowstone Park. Was an immigrant. So we would visit her. I'd bring my kids out there. Absolutely love Montana. Did the dog sled run in the mountains, skiing, hiking, the whole 9 yards. Yeah. So you're a Montana girl. That's how you hold yourself out, right? But you were born in Southern California, but you consider yourself to be a mountain woman, I'm guessing.
Yeah, I think it's where we get our core values. I feel like those really fit for our firm, is those Montanan small town values.
I can see those small town values permeate throughout your firm. Obviously, Dana Tompkins, one of the founders of the firm, I know her and I know her values, and I'm guessing that a lot of those have rubbed off on you. And I appreciate it on a professional and a personal level. So it's good stuff. So that's awesome. So let's talk about your professional career. What made you decide that you wanted to go into accounting and tax?
Yeah, I was always interested in math, and I thought that was an amazing thing that in college you could take math courses instead of a foreign language. And I loved math until it actually became a foreign language. Abstract math, finding the volume of these multi-dimensional objects that I couldn't even really picture, it started to be a little too much for me. So I decided math was not actually for me. And I just recently heard a statistic from a career services center that I visited. More than 1 in every 3 CPAs now have been influenced in their career by a friend or family member that they knew as a kid who was a CPA. Or I definitely fall into that category. My uncle was a CPA in Las Vegas.
Got it. Okay.
He didn't end up liking it so much. He was doing some gaming audit and decided it wasn't for him. And so he ended up in the real estate industry, but that CPA background, I talked to him a little bit and he was like, oh, with your history and math, the CPA world wasn't for me, but maybe it is for you. And so I started taking some accounting classes in college and really enjoyed them and just fell into it. I was on a mission to go to college for 4 years and then go right into the workforce. I didn't want to change my major and end up going to college for 5, 6 years, anything more than a day over 4 years. And I was like, nope, not going to happen. So that was a big appeal to me as well, that accounting, I could go work in the industry as soon as I had my bachelor's degree.
So we need to take this little snippet here and we need to broadcast this on YouTube because there's not enough of this younger generation, the 20-somethings right now, that want to go into accounting and tax. And on the one hand, it's good for you and I because we provide these services, right? Supply and demand. But on the other hand, there's a shortage of tax accountants.
There is a national shortage of CPAs for sure.
You're going to be the poster child spokesperson for recruiting all these people. I'm going to help you with that. You could tell your story. Okay. So your uncle had influence there. You knew that you could get a job right away if you did well in school. I'm sure you were a good student. And so probably the comfort of knowing that you could get a job. You wouldn't have to go back to school. You didn't have to get your law degree, all that stuff. Okay. And so you were thrust into the accounting world. Where did you start? And at what point in time did you end up in Tompkins and Peters?
I started right away. So I've actually only had 2 jobs in my entire life. I was waitressing at a diner that ended up going out of business right before I graduated from college. And so I had a couple of I did a little temporary work between then. And then I graduated with my bachelor's degree from the University of Montana in May of 2007. And by August 1st of 2007, I was working at Tompkins and Peters. My entire accounting career has been with Tompkins and Peters. And so that's been a great journey. Dana Tompkins, who is still our managing partner and still with our firm, was really someone I consider a mentor. And I don't think that I knew exactly what I was getting into as far as accounting. I was like, just work with some numbers, get that kind of figured out. And it was really Dana who was like, okay, this is what being a CPA means. This is what we got to do to help you to get on this further career path. And that was really instrumental in kind of the direction I ended up taking.
I can tell you that your mentor and your managing partner was knee deep in the foxhole with me when I had all my casino development projects going on, Sun Country Airlines, just a reliable, mature, good friend to talk to as I was coming in from the wars all shot up and full of scars. And Dana would tell me to calm down, everything's going to be fine, we'll get this sorted out. I'm a CPA too, so it wasn't like I didn't know accounting, but I had a lot of complex transactions going on. And I think at one point in time, I had to have been the most complex client she had. I'm sure you guys have outgrown me by leaps and bounds now, but back in the day, she definitely earned her money representing me, but she's just a great friend. I think the world of her. I've always considered her more than just a tax practitioner. She's just a darn good friend. And now that you've been involved, I don't talk to her as much, but I'm definitely going to have to catch up. So we want to talk about these tax topics, but I do want to focus on you as a tax practitioner. Maybe let's start with the client base that you work with. Maybe touch upon some of the major industries that you feel like you have expertise in. And then just tell the listener, what do you do? What do you do for these clients? Talk about the tax preparation, the tax planning. Give us some insight in a day in a life for a tax practitioner.
Sure. I would say our specialty industries are probably construction, real estate, and the service-based industry. And the service-based industry can be anything from like professional services, doctors, attorneys, marketing, sales, that kind of thing, to restaurant industry, bars, breweries. We've helped out with all of that.
Sure.
So I think that each of those industries, construction, service-based businesses, real estate, all of that has some pretty specialized accounting. And so that's where we feel like more often our clients fall into one of those three categories. We're a full service firm, so all of us partners have a little bit of well-rounded experience as far as audit or financial statement preparation, forensic accounting, and business valuation division, bookkeeping, and some of these payroll services. But I chose to focus primarily in tax. So I help clients all throughout the U.S. with all of their U.S. tax filings. So anything from U.S. operations, international operations for U.S. companies, any real tax planning or anything that kind of falls under that tax umbrella is something I typically help with.
Sure.
I am our tax partner, so I help out with the oversight of the flow of all of the tax returns throughout our firm. I help internally with some of that training and things like that. But most of my time is focused on my client that we can help with that income tax, those income tax services, preparation, planning throughout the year, and just minimizing those tax bills where we can. We think of all of our clients as clients of the firm, but when I refer to my clients, those are the ones that I am probably the primary communicator with. I'm their primary point of contact to help them if they do have any questions or needs throughout the process.
Got it. Okay. Your industries and areas of specialty are very much overlap with mine at MRD. Not only my personal experience as a developer, a lot of construction, a lot of contractors, real estate, approvals, planning, zoning, environmental, the whole nine yards. But yeah, a lot of my other clients are service-based, restaurants, engineering firms, law firms, some manufacturing. I try not to get too deep into that, especially the larger manufacturers. That could be pretty complex accounting and all that, but very interesting. And I can attest, and I'm hoping that the listener will understand that your background, your level of expertise, the depth and breadth of your practice is substantial. And I just know that the issues that I've dealt with on my own companies and some of the clients that I've brought to you guys over the years, there's been very few tax issues, tax rules, strategies, et cetera, that we have discussed that you guys haven't had some kind of experience in and insight in. So that being said, that this is the backdrop for the meat of this podcast, which is to dig into some of these tax topics, issues, traps, and on the more positive side, some strategies. We want to convey to these listeners that these listeners are thirsty for tax. So we're not going to say tax advice because we're not giving tax advice on this podcast. We're not handing out legal advice, but we are discussing these topics to illuminate these topics and to maybe motivate the listeners, educate them so that they can bring up these topics with their paid tax practitioners. Definitely spending a few dollars with their tax practitioners on these topics up front is much more economical than dealing with them on the back end when you've been nailed in an audit or you get a notice, right? So let's get down to business. I'd like to start with what I'm going to call a current event in the form of a gentleman with the initials of DJT, Donald Trump, who's going to be our 47th president. I'm probably going to have 17 podcasts just on that topic alone, but I'll try to resist the temptation of digging into Trump and that whole phenomena. And it is an amazing political phenomena, but I think from a business and tax standpoint, as a conservative, which I am, and I don't discriminate, I have liberal clients, etc., but I definitely lean towards the conservative tax policy, business policy, less regulation. And I think I'm very hopeful that Trump is going to live up to his word on that and that Congress, he's going to be able to sway Congress behind him. I'm a small business advocate. That's what I am. And I know that you are too. You're a defendant. You're an advocate of small businesses. So let's talk about Trump. We're going to go back to 2017 Trump Tax Act. So let's remind everybody of what was in that act, the impact that had on small businesses, and where those policies stand today. Maybe if you could start there.
Sure. The 2017 Tax Cuts and Jobs Act definitely did benefit small businesses and their employees in a variety of different ways. I would say some of the things that stand out to me is the increase of the standard deduction. So all individual taxpayers can either take the standard deduction or itemized deductions. And in 2017, for single taxpayers, the standard deduction went from $6,500 to $12,000. And currently in 2024, has increased to $14,600. So anytime we can simplify tax by not itemizing and just taking that standard deduction, it's always an advantage for the taxpayer. And so any of those W-2 employees that have wages and maybe aren't taking business deductions, that standard deduction raising quite a bit is certainly helpful, less taxable income in that case.
Yep, got it.
So we did see that for small businesses specifically, we saw an increase in bonus depreciation. So any large equipment purchases that are purchased for business use by a small business, they have to be capitalized, meaning you can't just expense the entire purchase. You do have to capitalize that purchase. But what the Tax Cuts and Jobs Act did is they allowed for 100% bonus depreciation. So instead of taking a part of that deduction over the useful life of that machinery and equipment, we were actually allowed to take bonus depreciation on the entire purchase of that equipment up to a limit, but you could still buy more than $1 million of assets and take that 100% bonus depreciation if it was a qualifying asset. And so that allowed for a decrease in taxable income and even created a way to have a loss that the Section 179 deduction previously didn't allow for. That bonus depreciation definitely helped out the taxpayers back in 2017. And currently, we've been seeing that bonus depreciation go from 100% down to, it's lowered every year since that Tax Cuts and Jobs Act is sunsetting. And so currently, that bonus depreciation would go down to 0% in 2027 unless a change is made.
So just to recap a couple of things. Some of our listeners may be familiar with Section 179 deduction. Some of them may not. But the key difference that you pointed out is Section 179 deduction is limited by, in essence, by the amount of taxable income that you have. Whereas the bonus depreciation is flat out an ordinary loss or deduction, if you will. And you could use that bonus depreciation to take, let's try to ratchet this down to something more realistic. Let's say you had a couple $100,000 in taxable income, but you had an opportunity to buy $400,000 worth of equipment, bobcats, trucks, leveling equipment if you're a cement contractor. Under that bonus provision, you could deduct that complete $400,000, would put that entity into a taxable loss. Is that correct?
Correct. Even if you financed those purchases, you could take that loss.
Even if you finance them. And I think the point to that is if that business owner had another LLC that was generating a profit that was flowing through their 1040, that loss on their construction LLC could be used to offset that income from the other LLC. Is that correct?
Through bonus depreciation, yes.
Yeah.
That is absolutely correct.
The word bonus should be in bold and in red letters, right, in the legislation, because that's the bonus of all bonuses right there from a tax standpoint. I'm guessing that you, as with all of your tax practitioner brothers and sisters out there, probably don't have any hard and fast insight as to whether or not that's going to be ratcheted back up to 100% in 2025. But is there hope that's going to happen?
Definitely. That's been mentioned as far as some of Trump's tax policy changes. There are quite a few policy changes that we are certainly hoping will be effective January 1st of 2025. We'll see what happens. We don't have a crystal ball, unfortunately, any more than anybody else does, but it's definitely been mentioned as one of Trump tax policies that we might see come through.
I have to believe that across your client base, if you were to send out, I get the Tompkins and Peters email or a newsletter every month. And of course, I just stop everything I'm doing. I'll stop traffic if I have to make sure I read it. It's that important. But I came across the Tompkins and Peters newsletter that, hey, guess what, gang? 100% bonus depreciation is now in effect. I have a hard time thinking of any more significant tax policy that would have a bigger impact on your clients. Is that a relatively true statement?
I would agree with you. Right now in 2024, that bonus depreciation is down to 60%. So only 60% is able to be taken in 2024. And if it doesn't change, that'll go down to 40% in 2025. So I think that would be a huge difference in 2025 from 40% back up to 100.
Listen, not that I can have an impact. I'll send Trump an email. I'll let him know that MJ says this is important. Okay, we'll see.
I like it.
You'll see what happens. QBI, maybe we could just spend a few minutes talking about that. I know that, I believe that was also part of the 2017 Act. Is that correct?
Yes. Currently, from 2018 through 2025 tax years, the qualified business income deduction will allow small businesses that flow through to individual returns. So sole proprietors, partnerships, S corporations, some estates and trusts will be able to exclude up to 20% of qualified business income from their taxable income. So that can also be huge, especially depending on the industry. There are certain businesses where there's an exception to that there's some income phase outs, that those are specialized service businesses. Accounting is one of them. But for those that qualify, you can exclude up to 80% or only be taxed on 80% of your overall small business income. Excluding 20% of your overall business income from taxable income can be a huge savings depending on how much that small business income is.
And that is supposed to go away at the end of 25?
Yes, for tax years ending after December 31st of 2025, currently it is set to disappear.
Yeah, got it. It's possible that he might try to get that extended. Good. Okay, listen, I think we've covered enough here on Trump and the 2017 Tax Cuts and Jobs Act and what may or may not be extended or revived in that. But our listeners are aware of it, and they can relentlessly badger their tax professionals to find out what the status of that is.
Yes, definitely.
I want to jump into 1099 versus W-2 issue with small businesses. Appears to be, if it's not the number one issue that small business contractors are wrestling with, it's up there. I don't know quite how to characterize this. Using the word problem might be appropriate. A challenge, maybe it's a nebulous gray area that the small businesses need to educate themselves on, correct? The stakes are high with this. I guess the insight that I'd like to get from you, let me just frame this a little bit. So when we talk about the wolves that the small business owners are facing on this, I've characterized this. You've got the tax wolves themselves, which is going to be the IRS, the state taxing authorities that are going to want their backup withholding and their employer portion of taxes. But you got workers' comp comes into this, state unemployment. In my experience, this issue comes down to a couple of things. I think one of it is just a lack of awareness of what the rules are. I think that's a big part of it. But we also know that it's also a tendency and maybe a temptation, if you will, to not want to pay workers as I'm going to pay you as a contractor. Here's a check. I'll give you a 1099 at the end of the year. Everything's great. Life is good. And I guess what I want to accomplish is to let the listener know there are things where if you don't want to consult with your tax advisor, that's fine. Maybe it's a meal deduction or mileage or something, whatever, if you want to wing it. This to me is something that if you are going to engage a tax professional, this is an issue right here that I think absolutely bring them in and let them look into your business model and see how are you conducting business? How are you getting the job done? Who are these people that are helping you? And what are they? Are they truly workers? Are they truly W-2 workers? Because if the tax authorities and the state entities, if it's a slam dunk case that they are W-2 workers and you're paying them a 1099, this is a risk, right? It's a big risk. So let's talk about what those ramifications are, maybe what you've seen.
This is truly like our business advisory and consulting services. General income tax preparation, we are not going to probably dive into this kind of topic.
Sure.
But I think absolutely taking it that extra mile and working with a professional that does know the difference is really key. W-2 employees, true employees, are typically under the thumb of their employer a lot more than 1099 contractors. W-2 employees will be provided typically with their equipment. They are scheduled certain hours to work, and the employer typically dictates how or when their job is done. A 1099 contractor is truly their own business owner themselves. They are a small business owner themselves, and a 1099 contractor can typically have multiple people or customers that they are doing jobs for, whereas an employee is typically often exclusive to their employer. A contractor might set a deadline, but typically uses their own tools and equipment and really gets to dictate when they get that job done or how they get that job done, as long as the overall deadline is being met. And so the small business owner typically likes to dictate often what that schedule is, how the employee is working, all of those items. But there's always the consideration for the employee benefits that go typically with a W-2 employee's job. So something else the IRS is looking at, or anybody who's auditing a business, whether they're truly a contractor or an employee, they typically do take into consideration, is vacation benefits being offered? Is this employee receiving insurance, retirement contributions, other employee benefits? So yeah, employee benefits, what hours are being dictated, like who gets to say what a typical day for that person looks like. If it is the employer, they're leaning more towards an employee relationship. If it is the contractor, the individual that puts their own day, what that looks like for them, a little bit more typically a contractor environment. A contractor is certainly easier on the small business for a few reasons. From an administrative standpoint, one, they don't have to provide any tools or equipment, and two, there's no employer payroll taxes that are being withheld from those checks. So You can just cut a check for the invoice provided by the contractor or the agreed upon price in the contract. And there's no taxes withheld. There's no unemployment, workers' compensation reporting, no employee benefits. It's certainly a little bit easier. Whereas with those employees, it might be nice for the small business to be able to dictate their hours, their schedule, their day, what jobs they're working on, what their priorities are, have that exclusivity. But paying for the vacation time and the sick time, paying all of those taxes that get withheld out of their paychecks, workers' comp, unemployment, it's a pain and can be costly from that perspective. There's definitely pros and cons to both the contractor and the W-2 environment for the small business at least. But the IRS is generally favoring towards the W-2 employee. They get 100% of the Social Security and Medicare, those payroll taxes on all of those gross wages, whereas with a contractor, they're only getting those same self-employment taxes on the overall net profit that contractor ends up reporting.
To put a finer point on it, as it pertains to the IRS, when you say they favor the W-2 scenario, right? Meaning their job is to generate revenue, right? Agents don't get promoted by looking the other way or helping out the taxpayers. Not that they're all bad, but so clearly, if there's a gray area, one could make the argument that they're definitely going to try to paint that individual as a W-2 employee, as opposed to saying, we'll let it slide and call this person a contractor. Here's a little trivia question for you. I don't know how much experience you've had with this, but this is something that comes up. I've just seen it over the years where a contractor will hire a subcontractor, if you will. It might be an individual that owns a company and has employees, right? But what that general contractor does is either asks or forces the sub to put on their uniform. So I don't know how much exposure you've had to that. I've just become aware of it. What's your take on that? Is the IRS, do they ever come in and say, okay, what are these guys wearing your uniform, ABC Construction Company? You're calling them a contractor, but they're wearing your uniform. Is that a problem? Is that something that a small business owner would want to avoid?
That's a great question. And I think that in most of these situations, there isn't just a black and white,
Sure.
This is an employee, this is a contractor.
Yeah.
If I were working with that client, I would say my question would be, who bought the shirt? Was it the employer that provided the shirt? Or was it a requirement that the contractor pay for all their materials, including a uniform that was provided for the job? Because if the employer is providing any uniform tool, it sounds like an employee. But if it's part of the contract that they wear that shirt, I wouldn't say that necessarily needs them as a contractor.
Got it. So if they have to pay for it, it's not a tool, but it's definitely an item they need for the job. And if they're paying for it, theoretically, that's your arm's length, right? Very interesting. So we talked about the difference between the two. What I hear you saying is that the IRS, they use kind of a scale approach. It's not just one fact, but maybe they're looking at a number of factors. And which way is the scale tipping? It's not just are they wearing the general contractor's uniform. It's who's directing the workers? Did they buy their own? Do they have their own tools? Are they allowed to have substantial freedom in their schedule, how they schedule their work, et cetera? It sounds like it's a lot of those factors. Clearly, if the small business owner is providing health insurance and vacation and sick pay, I got to believe that's just a rope that's going to hang them right there. I can't imagine them wiggling out of that.
I would agree. That's a big one. Those employee benefits make a huge impact.
Got it. But I want to talk about what I really want to dig into. This has been good. And there's some good framing that we're doing and some notes that can be jotted down in terms of these listeners can take these rules and these insights and they can apply them to their situation, kind of ruminate a little bit. However, we do need to touch upon the motivation here. I'm a business owner. I'm a developer. I've been a risk taker all my life, right? And when you're running a business, you're managing risk. You're taking risks and you're managing them. And when you take a risk, you're actively making a decision that, yeah, I could fall over the edge here or the floor could give out, but it's worth it. I'm going to try to traverse this because there's a big bag of gold over there. When you're managing risk, what you're doing is you're putting measures in place where you're trying to reduce the chance of something bad happening. It's not necessarily that you're going after a pot of gold, but you're trying to reduce a wolf from devouring you. And I look at this as when small business owners know generally what the law is. They may not know it to the extent that you do. This is what you do every day, but they understand. He's an employee, but I don't want to pay him as an employee. I don't want to pay employer portion of taxes. I don't want to pay workers' comp, right? They're taking a risk. And make no mistake about it, for a lot of contractors, taking that risk can have a huge short-term financial benefit to them, right? We're not here to give advice, but I think the listeners really need to understand, is it worth the risk? Yeah, you're not going to pay employer portion of taxes. Your workers' comp is going to be less because you're telling the whole world that these are contractors. In my mind, it's not worth the risk. If somebody's an employee, pay him as an employee. Almost from a moral standpoint, they deserve to have the benefits of an employee to a certain degree, right? If you want to hire a contractor, hire a bona fide contractor. Hire a company that has other clients and that has their own workers' comp insurance and that pays unemployment, right? I don't know how you feel about that, but that's really my position on that. And when I get clients asking me, I say, listen, if they're employees, pay them as employees. Because the newspaper, there's been articles here in Minnesota of companies, small business owners right here in Minnesota getting nailed to the wall on this issue. So I don't know if you have any final thoughts on that, but that's really my position on that.
I think it's important to make sure that it goes with what the workers are looking for too. I think that it can be a selling point, whether you design the job looking to attract contractors or looking to employees. That's a big incentive. And if under a worst case scenario, if there is an audit and these workers end up getting reclassified, there is a lot of penalties and a backlash that can happen on the small business owner. It can be the employees that are bringing attention to the issue if they feel like they're not being treated fairly. There is actually a way to report your employer. You can report businesses to the IRS if you feel that you have been misclassified. So having an employee as a whistleblower is definitely one way to attract some attention. And under a absolute worst case scenario, paying back payroll taxes, amending old tax returns, hoping that you can still get the deduction for all of the large amounts of these taxes, penalties that you have been paying, that can be quite the project and quite the bill. And none of those penalties and fines are deductible on an income tax return. So if you do get hit with those, the actual taxes, payroll taxes, you can typically deduct as long as the statute of limitation isn't up to be able to go back and amend those. But any civil penalties, any just penalties and fines for misclassifying and incorrectly filing reports previously, none of those will be deductible. So those are just out of pocket and at a loss for the business owner if that does end up happening.
Yeah, I'm aware of several instances here in Minnesota in the last 4 or 5 years where business owners have been indicted on a criminal tax fraud for this.
Mm-hmm.
And if they can prove that they believe that the business owner really didn't know the rules, didn't know what he or she was doing, you're looking at a civil situation. But if they can prove that, listen, you knew exactly what you were doing, you orchestrated it, you engineered it, and I've seen it. We've had cases here in Minnesota where business owners have been indicted on this. When I got into this consulting business, it was something I ran into, this issue, and my clients know what my position is. Take the conservative route. If they're in fact contractors, great. Pay them as contractors and 1099s, but just be darn sure that they are, right? So MJ, we are running out of time here on this first podcast. There's a whole fistful of other tax topics that I want to cover with you, and I want to pick up at a later date. You know so much about these things that it's tough to move on to the next one because I really want to drill down. That's what I do. But so we talked about the Trump presidency and the potential impact there. Obviously, I want to have further discussions with you over the next several months as potential legislation is being drafted or passed. And I want to revisit this 1099 versus W-2 with you also at some point in time in the future, just on any potential updates on that. But topics for a future podcast are going to include day laborers. This is going to be an even bigger issue, I think, in the Trump administration. Some of the more seemingly mundane stuff, per diems, but it can come across as mundane, but it could also be a big bad wolf if you don't do it right. Cryptocurrency, I definitely want to hear your opinion on this. This is huge. And then I also want to touch upon maybe some tips that you can give the listeners in the event that they get notified that they're going to be under an audit. So how can we help alleviate the fear and talk them off the ledge if they get that kind of letter? But that is for a future podcast. We've laid the groundwork for MJ and your experience and expertise, and I think it's been as advertised. I'm ecstatic with what I'm hearing and the insight I'm going to learn on this. It's not just going to be my listeners. I'm not a full-time tax practitioner, so I need to know this stuff too, but I definitely want to have you on again.
Thank you so much for having me this time. I would love to come back and talk a little bit more in depth on some of those topics that you mentioned, for sure.
You definitely are going to have a spot on our podcast, so you don't need to worry about it.
Looking forward to it.
Yes, we are too. And so we're going to wrap this up. And I want to thank MJ Huffman again, the Michael Jordan namesake. I can't believe that you've allowed him to use those initials all these years, but he's a good guy, right? But listen, we really appreciate it. We are going to circle back with you. There's so many more topics we need to cover, but we appreciate it. We hope you have a great day and keep your head above water in the busy season here.
Thank you so much. I really enjoyed being here, and I'm looking forward to coming back.
Awesome. We'll talk to you soon.
All right. Thank you.